So today we're going to be looking at whether or not Airbnbs as a property investment are a good idea. You start to question at that point whether it's an investment or whether you're buying a holiday house for yourself. It's not going to be a passive property investment. There is going to be a bit of work involved.
You're competing against hotels.
Yep.
They're going to be your biggest competitor. So if you go and buy, say, a unit in the middle of Sydney, well, you're competing with every hotel in Sydney as well.
Because essentially the way I look at having an Airbnb as an investment property, it's almost like a second job.
Obviously, there's risks with any purchase and any investment, but there's obviously a lot more risk relating to Airbnb.
We'll get straight into it. So pretty straightforward why people want to invest in Airbnbs. They're high yielding.
And that's the thing, yeah, it is the core reason behind it. Essentially, they're high yielding assets, and a lot of people want to use them potentially for lifestyle factors as well.
Yeah.
So, from looking at it from an investment lens, you're not purely looking at it from an ROI perspective potentially. It's just maybe covering costs if you're using it as a lifestyle property for yourself.
I think a lot of people do that. They buy one on the Gold Coast or they buy one there and they rent it out on Airbnb with the intention they're going to go up there a week or two a year or whatever it is as well. So you start to question at that point whether it's an investment or whether you're buying a holiday house for yourself.
Yeah.
So that's something that people need to really look at. Are you buying the best investment for what you're able to buy at that time, or are you buying a holiday house for yourself? Exactly.
And it is. It's like if it works for you in that scenario, that's the importance of setting those goals early on.
Yeah.
Because going into it, you're not just buying it as an investment, but really you're using it for yourself. If you're using it for yourself, you're basically just covering your costs.
Yeah. So it's straightforward. Obviously, when you're buying an Airbnb, you're obviously going to want it in a nice area, aren't you? You're going to want it in a touristy area, somewhere where there's going to be a high turnover of people.
Yeah.
Because essentially, the way I look at having an Airbnb as an investment property, it's almost like a second job. Unless you get a management company, which then does eat into your profit, if you want to call it that, but it is a full-time job in a lot of cases if you have multiple of them because you are flipping them, you're turning them over, you're cleaning
and
them.
even if you have the management company, it's still an active approach with managing them, because if you've got, say, 5 investments that you're managing, you might have handed them over to a property management company, but you're still liaising with that property management company. Has there been any damage? Do you approve anything? No doubt you're being sent invoices, or
a lot of the time too, the booking of it is just done through the owner as well. Yep. So the booking and approvals of that's done through the owner, and the management company look after restocking towels and cleaning and doing those sort of things. So it's not going to be a passive property investment. There is going to be a bit of work involved.
But I mean, one of the big things is, obviously there's risks with any purchase and any investment, but there's obviously a lot more risk relating to Airbnb, because a standard property, residential property in particular, is subject to the regulatory environment, but less so compared to Airbnbs.
Oh, for sure.
Because obviously, one, you're competing against hotels.
Yep.
They're going to be your biggest competitor. So if you go and buy, say, a unit in the middle of Sydney, well, you're competing with every hotel in Sydney as well. So how are you going to buy a property that stands out on an Airbnb platform? But a lot of people are probably looking for accommodation on booking.com in the CBD of Sydney. But if you're looking at other areas of Sydney, say Manly, for example, there's a lot of tourists that go there. There's only really 2 hotels on the Northern Beaches or in that pocket. So you might find a little niche in Manly where you can buy those as an investment.
Beaches, 100%.
And then you don't have that competition risk from the hotels, but you're still subject to regulatory environment for councils or states.
Because what it's actually doing in a lot of those cases in those areas, it's taking properties out of the rental pool.
Yeah.
So then, as we would all know, we've got a bit of a rental crisis at the moment. It's driving up inflation. Rental prices are going sky high. So removing more properties out of that pool, councils don't like that, government doesn't like that. That's why they enforce these regulations about how many times or how many days you can. So we'll run through some of them. This is just some high-level stuff, but there is in New South Wales. I think you mentioned New South Wales is one of the most
Yeah.
regulated.
New South Wales is the highest regulated market, and not surprising, obviously, because of the rental market here. But you were just about to say, Brad, 180-day rental cap.
Yeah,
and that's just state-based.
And the night cap does actually determined by certain councils as well. Some are less than that.
Yeah.
I mentioned, you'd have to look at each one. Victoria, it's council controlled, so not state based, but it can be strict in certain areas as well, especially in areas where vacancy rates are quite low.
Yep.
Queensland, look, historically Airbnb friendly because it is the holiday state as they call it, but I know for the Gold Coast, I know the Gold Coast has very strict Airbnb caps.
You think about all of the other tourist attractions in Queensland and even Victoria, and Victoria has the strata powers as well. Onyx Corporation can prohibit the Airbnb use, so that's another thing. But Queensland, like you said, the Gold Coast, a lot of people buy units on the Gold Coast as standard residential investments, but a lot of people want the Gold Coast as a holiday area as well. And they're relatively cheaper units when you're comparing it to a lot of our other major cities. So not surprising that a local council has put their own restrictions on Airbnbs in that area.
So South Australia, it's saying, or Western Australia, South Australia, fairly unregulated, fewer blanket restrictions. Tasmania seem to be a bit of regulation there, but it is council based. So the basic exclusions are if it's a primary residence.
Yeah.
So if you are if you do live it majority of the time and you're going away on a holiday for 6 months or whatever, there's no caps then.
And that's the thing,
it's not being removed from the rental pool.
No, it's your primary residence, and I mean, if people want it for extra cash flow, that's great.
I know in Newcastle when the V8 supercars are on, you're always going to have event spikes. Yeah. So in Bathurst for the V8s, bang. Yeah. All the owner-occupiers are moving out because they, for them, it's the worst time of the year.
And I would say,
they move out. It was the same in Newcastle,
Yeah. All of those major, even the Australian Open in Melbourne. Yeah. Like I would 100%. Say that there's, even small houses, not even units, that go up for lease and people just go, it's so busy in Melbourne here for the weekend, we're going to go away.
So we recently went to New Zealand as a family, and majority of the time we're over there, we stayed in Airbnbs because of the availability of them.
Yeah.
Certain towns in New Zealand, smaller towns, especially South Island, there's no hotel.
No. So you and that's where this does come in.
Yeah.
If you're not relying on the homeowners to lease their property, because then there is that thing with if you own a property, you might have a bloody $5,000 lounge, $10,000 lounge. Someone comes in and spills bloody red wine on it. And you're like, well, fuck, was it worth it?
Yeah.
So, but if you want to, actually explore places, especially New Zealand, because some areas are quite remote, you do need people buying them for leasing purposes 100%. As well, for tourism.
So tax-wise, obviously we're not an accountant. Go speak to your accountant. Don't sue us. But earning income from it is taxable.
Yeah.
Expenses are allowed. Your cleaning, management, utilities, all those sort of things.
Yeah.
You do need to apportion that to personal use, though, especially if it's an owner-occupied.
Yeah.
So you need to keep some logs and some clear records of how many days, and I believe you can do that through the app quite easily.
I think in terms of how it gets treated for tax purposes is really dependent on how you use it
and how it's held.
Owner-occupier. Or did you buy it just for a holiday home? Is it purely is it purely investment related?
Is it owned through a company or a trust? Or there's a lot of factors. Speak to your accountant.
Yeah.
It can affect capital gains tax. Again, speak to your accountant. We won't go into too much detail about that.
But it is subject to capital gains 100%. Tax unless it's owner occupied and you're going for that 6-year rule. But you need to be very strategic with
the apportionment.
How you approach that. Right? How you approach it.
So more in my realm, financing on it. So so when we use the income for Airbnb, what they'll usually do is take a 12-month average.
Yeah.
Because it is seasonal, we can't just take 1 month's worth. So if you are buying a property that you are intending to lease out under Airbnb, we can't use the predicted.
Yeah.
So we'd need a general appraisal from a normal real estate because that's always the fallback.
Market value would be.
That's always the fallback. Yeah. So let's say it's $1,000 a week.
Yeah.
We will use that figure for the purchase.
Yeah.
And then you go and use what you need to use.
Yeah.
After 12 months, if it's been consistent and it works out more than that $1,000 a week, we can use it at that point.
Okay.
So we then get a statement.
Is
of
there a
12 months.
buffer or something that they use, or are they?
Each lender's different.
Okay.
But they will then use that into this. So it's a 12-month average. I think a 12-month average is enough to realise the peaks and the slow periods and stuff like that. Some lenders won't use it at all. So it's really important that you do explore via a broker to figure out which lenders are going to do what. But some do add buffers to it. Some only use 80%, and there's a lot that they do to be conservative.
But probably just best case scenario, just rely on a standard rental appraisal,
especially for affordability.
Yeah,
and not just serviceability. There's two different things here. Serviceability is what the lender will give you. Affordability is, in my opinion, is what you can afford.
Yeah,
so let's do your figures based on what would happen worst case. So don't assume that it's going to be the best Airbnb in Gold Coast and you're going to be rolling in cash. Assume that it's going to fail and that you're going to have to rent it out for the
because there
$1,000
is that competition risk as well. Correct. Because you might go and set yours up and operate it for 12 months, but your furniture's starting to deteriorate now. Yeah. Someone else comes along and does a much better unit or house or whatever, and puts it at the same rate as yours. Yeah. Well, then all of a sudden you're in competition with that person. Do you start to decrease your prices, or do you try and upgrade? So there's that constant turnover of new properties coming to market as well.
So cash flow, it seems a lot of the time that it's really profitable and all these things, but you've got to factor in the cleaning, the management, all these things. Yeah. I think on average it's around 15-30% of the gross income goes to those fees. Yeah. So take that off straight away as soon as you're doing your calculations.
Are you approving and managing the communication of it, or are you completely handing it over to the platform to manage? Are you a super host on Airbnb that it gets automatically approved? There's so many factors involved.
Is the area you're buying in seasonal? In those cases, are you going to lease it out under a general leasing pool, like just a normal lease for 6 months and then convert it over?
Well, I think one thing that we... relating to the financing thing that we didn't touch on, if it is a lifestyle property that you're buying and you're just using it for maybe 30 days of the year, if you're using it, say 60 days of the year, and then you're potentially just leasing it for that 130, whatever the state-based average is or minimum requirement is, in that case where you're not getting a super high rental income because you're only leasing it for 30 to 60 days, for the financing component, you're probably best off just getting a market appraisal because you're probably going to get lower rent anyway.
The average would end up lower.
Yeah,
yeah. So you got to. It's a bit of a case by case sort of thing. Yeah. You would have to look at each one and go, all right, are we better off using the 12-month average for the Airbnb, or do we just get an appraisal? There's a lot to it. It is a lifestyle driven investment. Let's face it.
I think it is. I mean, unless you
make a business out of it.
Unless you make a business out of it and you're willing to take on risk. Yeah. But be aware of those risks as well. And I mean, one of the risks that I think we haven't touched on is another pandemic or some sort of economic factor like that's just unpredictable.
Yeah, it is hard to tell.
What happens when you go into a lockdown or something changes and you can't lease out your place for a pretty significant period of time?
So I think, realistically, in summary, the buying a property in Airbnb can be profitable. It can be good, but you've got to pick the right area. You've got to pick the right price points. Yeah. There's a lot to it, as opposed to just buying a property, throwing some tenants in and setting it and forgetting 100%. It. So there's a lot to it, but you can, if done correctly, it can be done really well.
I'm not I can't give any context around this, but I know what I've heard on the grapevine that some people have got around residential tenancy agreements where they lease a property and they don't own it, and then they sublease it to a short-term rental accommodation structure. Yeah, I would say it comes with more compliance, more risk from an insurance perspective, but I think you can do that. So whether somebody wants to go down that route, if they don't have the capital to go and purchase, try and lease and then sublease.
Sublet, yeah. And again, that comes down to what the body corporate, and there's a lot to it. So do your research, be conservative with your numbers when you are, working out how much you're going to make from this. Yeah. Don't just see an Airbnb that you went to on the Gold Coast and you paid $1,000 for 2 nights and go, wow, I wish I had one of these. Yeah. There's a lot more to it.
100%.
So do your maths, figure it out, speak to a broker like myself, and work it all out before you commit to anything.
That's it for this week. Airbnb all wrapped up.
Yep. Next week will be some lovely interest rate stuff again,
Oh,
I would say. Always a fun one, but we'll see everyone on the next one.
See you next week.